Hey everyone, DayTraderrockstar. Got in the office early today. I wanted to really put out a video. The latter part of last week really showed us some things, and as I do my show each day, it becomes apparent. The more and more new traders that come and visit the site and take a look at some of the setups. I realized that as a new trader, you're very anxious and very excited to get into the markets now. I have to deal with that. There's some days there are up days, some days are down days, and there's all different type of traders out there. So we really want to break down. I want to really do a video today and really break down, the keys of success, and understanding what kind of trader you are. I mean, I would say, you basically off the top of my head take a look at three different type of traders. You have the short-term scalper, which trades intraday. You have the medium-term or short-term swing trader, which holds overnight, but not really more than a week or 2 weeks. And then you have the longer-term investor. Now, you really have to determine which one you are and understand if you are that person, you have certain rules to stick to. What's good about this, and what I'm going to show you, is the methodology works across all time frames. Works the long-term time frame, the short-term, and the micro time frame. And I want to show that. We're going to just show Amazon right now because the last week I've been getting into Amazon and really want to point out, some of the key components of really being consistent in the market and not getting too concerned with the intraday volatility, but pretty much look at the bigger picture. So when we take a look at Amazon, I think a couple of things comes apparent that one of the main signals that I want to get is what I call pattern recognition, and recognizing the pattern that's playing out in the market. Now, I've seen, if you tune into the show each day, I really try to point out the patterns that are forming in the market, and from that level, we have, we know how to trade those downward channels. We tend to trade to the upside, taking the lower trend line as that is a risk-reward trade. Upward channels, we understand that the upward channel break to the downside the majority of the time, so we try to time our trade to the downside. So, and this happens over courses of days, a course of hours, and of course, it plays out over minutes too. And that's where you really determine what kind of trader you're going to be. So, with the Amazon, just to start off with Amazon, a great pattern playing out here. It's called a downward wedge pattern, and you can see the recent areas here in Amazon. We start off by learning how to recognize a channel, and with that we talk about the 1, 2, 3 method, where you put in 3 pivot areas, and then from that point on you can predict 4 and 5. So that kind of plays you before anything else happens in the market. You already planning out your next trade. So if I see a 3 points or 3 pivot areas here, and even going back out and seeing 4, the more you find that these pivots line up. You have 2 trend lines here, and you can extend that out. You always really want to take that trade the next time it comes down to that level, similar to to the lower trend line once you start to establish it. Now, I did a lot of videos on how to read the 1, 2, 3 pattern, how to plan your trades, and how to identify the charts. I'm starting a new series called DayTraderrockstar's Playbook, which I'll be detailing each one of these setups. So I think it's important to establish what kind of trader you are, and then put yourself in a strict methodology where you're not chasing the market, you're letting the market come to you. In this case, we're using one of the key indicators that I use is the stochastics, and you wait until you get your overbought or oversold levels on the stochastics. In this case, we'll just talk about the oversold levels because we have a downward wedge pattern. And you'll notice that some of the levels start lining up. You have a recognizable trend line and an oversold stochastic, so you got a nice little bounce. You have an upside trend line here, and again you ran into a little resistance with the 200 period moving average here, so you got a little pullback. But looking at this, looking at the daily, you're still in the daily stochastics as a positive momentum, yet we're pulling back, and Amazon's a big stock, so you have to really not go overboard on just jumping in and saying, all right, this is my position and I'm going in full force here, because the market is, it's a timing issue here, and we want to break this chart down to the 60-minute chart. When you look at the 60-minute chart, you can see that the overall channel, which is a positive channel, this is a pattern that breaks to the upside. And how do you do that? Is time, and we know that on a wedge pattern. This was the first excuse me, the first video of the series, the playbook. The last week I did put out a video on how to trade a wedge pattern, so look for that under the YouTube videos. But we look at a pattern like this to break out about that 65 to 75% area. So we know that anywhere in this level down here is going to be a good risk reward, because we're looking for a pop up here. So break it down to the 60-minute chart. That's what we're really looking at. And we saw we pulled back to that 190, 189 level last week, and we had a beautiful bounce off of it. We moved right up to 196, almost 197. And that was a really good trade. And then we pulled all the way back. But, knowing the overall pattern, a lot of people would get nervous saying, oh, it's not. But the overall pattern's really holding up, and nothing's really showing up here. And we actually got a slight little pullback on the stochastic and cross back over. But we're pushing more closer and closer to this trend line. Looks like a break of 196 would kind of trigger that. Probably 197 really trigger a break up to 199. But what I think is really key here is looking at, again, breaking the trade down. If you're uncomfortable daily, then look at the 60-minute chart, and then it gives you faster entries. If we look back here and we see the pullback, remember each candlestick represents 60 minutes. So you have a few hours in the day that you could get a decent signal, and with that signal you could get a decent trend just based off the 60-minute chart. It happened almost 2 days in a row. So we got two good signals, and now what you do is you break this down on the 5-minute chart, and you're going to see something really exciting. And this is where you come into your scalpers, and where Amazon's such a good scalper, because you see how it pays attention to the bounce levels and the quickly oversold and the overbought levels. The rotation, I call this, the rotation and the momentum. And that's what you want to see. You want to see a stock that gets into a rhythm. Back down and up and back down, and with that, in a trending market, you just follow the trend. You buy on the pullback, and you see that follow through. You sell on the thing, and that's how you would scalp a trade like this. And this happened on a Friday, so a very a very organized trade, very easy to follow. Something we follow each day on the radio. So that's just an example of how we want to really determine yourself if you're going to be a short-term trader, a scalper. Then you're going to break it down on maybe to the 5-minute, 1-minute chart. If you're going to be kind of an overnight swing trader, or a 1-week holder, then you're going to look more at the 60-minute chart. And again, the dailies are always going to be something that you want to watch, because once you get a high probability setup on a daily. And remember, a high probability setup means the combination of multiple indicators, which the 5 we use: stochastics, recognizable patterns, trend lines, moving averages, and reversal candlesticks. So you could see here, based on the 1, 2, 3 pattern, you had 4. Then make that parallel line. You have a underlying trend line. You have a recognizable pattern. You have a 200-period moving average. This was really a high probability setup in an oversold stochastic. So this was one of the great combinations of indicators lining up right here, this area. So that's why you look at those levels when they come around. They might not come around once a month, but at least you're always looking for them. And that's my job, is to bring them to you. So that's what I do when we put out the 10 for 1,000 watch list each week. We try to identify each and every one of these setups and then kind of deliver them to you. So again, just want to break down as a standard chart what we're looking for as a trader. First of all, we're trying to get ourselves in a kind of in a zone, in a rhythm, where we're not chasing the market. We understand that if you classify yourself as a short-term swing trader, then you have a pullback. Just read it out. Like, you don't have to get overly concerned to have a pullback in the market. Markets just don't go in one direction. But the overall pattern pointed to an upside break, so you might want to use that as an opportunity. Just to go back and look at some other stocks and stuff. Here's Verifone, PAY, which is a stock I follow a lot, and you can see the downward channel that developed. And I'm not marking out anything on here, but you do see a couple oversold levels on the stochastics, and you could probably line that up as a double bottom here. And it was just a good pullback here, and it rallied. So you see the pop up and the pullback, and that's on the daily chart. But when you go out to the 60-minute chart, you start to see some really good levels here in the 60-minute chart. And these are old triggers from a previous watch list. But you can see that when we pull back down into an oversold level, you have a better chance of getting that bounce. The same thing if you get overbought, you get a good shot of a pullback. So you want to put yourself into that methodology that you're not chasing. You want to be able to, like, what I want to do is, take the emotion out of the trade, become that computer. And this is the closest way you're going to become that, is letting the market come to you on your buys. You're buying on pullbacks, you're buying on trending stocks, but into weakness, and you're selling into strength. That, you have to get that through your mind. You have to really adjust yourself, not believing, the hype and chasing stocks. It's all about, this market is not the easiest market to trade, but once you take the emotion out of it and you take the time frame out of it and just take the positions you want to take and have those really either brought to you or like just told to you by your indicators, by the alerts that go out, and then you start looking at them. If it's not, if it's not in a situation where you want to look for a pop, like this recent pullback on Verifone was a perfect opportunity. You got a pullback, you had a nice run, and we got over. Now we're back into an overbought level. So this ends up being a little harder area to go long. You might want to consider the pullback play on this. Remember, it doesn't matter if you're long or short the market. It's a matter of try not to go against the indicators. Try not to go against the overall markets as much as you can. I mean, overall markets, if you break it down to the 5-minute chart, of course you're going to have lots of volatility and lots of good setups throughout the day, and some trending stocks. And to identify that trend happening, is half the battle. So you can see here. Here's a good example, of the pullback, and understanding the pullback and saying, oh, my stock's pulling back, this is awful. Well, in the grand scheme of things, maybe it's not that awful. Maybe it's an opportunity for you to adjust your position size, get a better price, understanding that the trend is still intact. And the short-term trade, this is a vehicle to make money. It's not an investment vehicle like our parents used to have. It's you'll see movements in the market, and that's all you want. You want a nice range. You want a nice move up here, and you want a nice move back down to here, and you want to be able to time it from, getting oversold. So you want to start looking at your levels here, and that's pretty nice. $40 all the way to $43. That's a 3-point move in a matter of a couple of days. So, people, invested in the market are happy to see that all year, where you're attacking the market only at specific times, taking your profits and moving on, and waiting. Waiting is the key word. Waiting for the next setup, and then boom, you get a nice trending day. All right, so you see the concept. Again, being an emotional trader is always going to play havoc on you. You're always going to have that fear when the market's selling off and you're long, or the market's ripping and you're short. You're going to have the sweaty palms. You're going to have what happens if the market doesn't pull back. But that's what the market is great at, is taking you out of your trade, taking you out of your game plan. What you need to do is have a methodology, the discipline, and the patience. Three keys right there. Once you're able to do that, and then you're set. Then what I say is my best analogy is you step up to the plate. Once you have everything set up and the pitch is over, here's the pitches over the plate right here. Here are the pitches over the plate. You got to take the bat off your shoulder and swing. All right, simple as that. Now, the news in the market is a different story. I mean, there's the landmines of different news coming out, but we got that covered, Each and every day, we're listening to the news. We have it, fed right to us. So, we're on top of it. And, and over the time, you start to see how the news plays out. Some events don't get sold off as much or pop as much, and you realize that those news events are not going to be a factor as much. And then you can, adjust that from there. But just to continue on this thought, because I think this is such an important concept in the market, is not, to have a strategy. It doesn't mean, any let's take a look at another stock here. There's something, EC, Ectopetro was on the watch list a couple weeks ago, and again, it's just, you could look back at a stock and see how that stock, moves. And we said, all right, this stock is very easy to kind of read. It moves in directional trades. You can recognize the patterns. You could buy the oversold levels. This recent entry actually came in a couple weeks ago, where you did see that oversold level, and you knew that you're in a downward trend line, and you're getting a stochastic divergence. So we were looking for that pop up, and exactly what you got was that pop up. Looking back at it, it's like, wow, that seemed very simple, but the timing was everything. Even if we're in here and you get a 3-day pullback, and you kind of just said, well, you're still holding off for recent lows here. You pulled back, but the entry that was here, and you get scared out of it. It's very hard to get that perfect setup, because the choppiness. Maybe there was some selling coming into the market, that false selling going into Thanksgiving, but then all of a sudden your trade is in the profit zone, because the pattern overall was a very viable pattern. And again, across the board, you can look at these things. I'm about to send out the 10 for 1,000 watch list for Day Trading Radio members, but I'm definitely going to look at putting Colgate-Palmolive on it, because again, you look at a stock that's a good stock, and you break it down to the 60-minute chart, and this is exactly what you want to see. That that Colgate-Palmolive reacts well with an oversold level, and I draw those stochastic indicators in. This is 1433 slow stochastics. All right, and what I want to do is, I want to just draw that, give myself an idea of where overbought and oversold is. So 20 and 80 is my parameter. So you can make it 1585, 90, 10. But for me, because I'm using 4 other indicators, and I want to have multiple indicator setups to really to kind of back up the original indicator. We want to have the recognizable pattern. We want to have the stock, price stochastic divergence. We want to have some maybe support or a moving average or something else out there. So we're getting oversold here on the 60-minute chart. We're holding off for recent lows. So this actually looks like a viable rally stock going into next week. This is Colgate-Palmolive. But again, that's the methodology. I wanted to show you that one. Potash recently was a good setup. We recognized that pattern. We recognized the 1, 2, 3 pattern, and that this was a good buy area off of the lower trend line. And you can see how that set right up. We had a nice run into that. We took almost $2 off of that trade, and it came back down, and once we saw it turning back down, we were like, all right, well, we have to be careful on this. Let's wait for this to bottom out. It actually kind of bottomed out on Friday and actually got a little bounce. Not quite interested in it yet, because there's an overall pattern. We go on a daily, and we're seeing that overall pattern down by that $39, $38 level, which would be great. But now you can actually see we had a nice reversal candlestick on Friday. So this is an interesting setup. We came back, closed back above that triple bottom. This low, now this low. So potential here for an upside push is definitely there. But something that, again, that I kind of rotate in and out of based on the 60-minute stochastics, recognizable channels, 1, 2, 3 method. So this will be definitely on the focus list going into this week. And there's actually another good setup here. I want to throw another freebie out here, but remember these out of when we put out the watch list each week, what we want to do is put out the best setups in the market based off the the pullbacks. Again, I keep on stressing, let the market come to you. Don't chase the market. Don't get into a trade just because you're bored. There's a lot of other scenarios setting up. Here's Target actually pulling back nicely on the 60-minute stochastic indicator, but I'll go more over that on the watch list. Just a couple other stocks. We just throw stocks out there because it's great just to look at them. Archer Daniel Midland, you can see the recognizable channel. The oversold, this is almost a coil stochastic indicator down here, which is a very powerful setup here when you start to see that grinded, and then you get that breakout. So we also know that these patterns, downward channels, break to the upside. All right, and so your trade is going to be this pattern, but on the lower part of the pattern. That way it takes the risk out of it. You have the best chance of the biggest move. Now, of the thousands of stocks out there, we see them set up all the time, so we just continue to watch those. So this was actually a really good pullback here. Stochastics were getting oversold. That's the 16-minute chart. We saw that happening. That, along with Dow Chemical, which had a nice pullback. And you can see what was so cool about the Dow Chemical is we finally got oversold, and you had that nice reversal candlestick, and we pulled right back into that pattern. It was almost a shake and bake that pulled back and filled this gap. There's things about gaps being filled. But now, Dow Chemical actually looking quite good. We held that upward trend line. We could probably extend this one out a little. It's really identifying your patterns. And here's your channel line. And the overall base, there's bigger patterns that are playing out, inverted head and shoulder patterns, trend line breaks, retracements, push back up. This is all going to be in the playbook. I'm going to do another playbook video today too. Haven't decided the topic yet though. Let's just go over a couple more setups, so you just pretty much get the methodology. Even on a stock you might not even like Abercrombie. We ended up shorting Abercrombie. Had a great short. Got hit with bad earnings, and we got a good profit off of it. And then I kind of threw it away. I said I'm not going to be interested in it. And then I did notice it. One of the watch lists ago, I noticed it coming down to this trend line, and everything was set up, but it was it was kind of bearish on the stock overall. So it was hard for me to take that position long, because I had this predetermined opinion on ANF. So that's that's my emotions getting involved. But the methodology played out perfectly. You came down to that lower trend line. There's not a reason why we didn't. Why did we bounce right here? Why didn't we bounce down here? I always say, if for those people out there that don't really buy into the technical analysis thing, then why didn't we just pull right back to here? Why do we have an algorithm that picks up a point here and a point here? You draw that straight line, and the next thing you know, you're getting a bounce there. All right, that's your pitch over the plate. If you want to be successful in the market, you got to push the button. And when you push the button, it's a big difference. If there's a reason to push the button, here, or is there a better reason to push the button here to long? Now we're getting overbought. It's basically waiting for your pitch. You want the combination of indicators to line up. Something there. ANF. CCJ. I know people are, this is a good review on this one, because I have this one as a really classic setup, especially because the stochastics are embedded here. And again, Thursday, with the market getting, thrown around quite a bit, we saw that the pullback, and people get a little concerned, but what we did see on the pullback was a nice pullback on the stochastics. We get a double bottom bounce on the stochastics. This is fine. Markets move up, they move down, they pull back, and they continue to move up. And this is what we look for on this one. So this one, still very viable setup for a break up to the upside. I think this is one of the better setups going forward. I'd be very, cautious under 17 though. Anything can happen. This is an Iranian play, and any kind of news that comes out and affects that sector could definitely weigh on the stock. So it doesn't mean that if it looks perfect, it doesn't mean that it has to work out. There's always the market conditions you have to play with, and that's another thing you have to deal with. You're not, just because we found a perfect setup doesn't mean the market has to pay attention to it. Let's see here. So many. I got some good setups for the 10 for 1,000 watch. So I'm going to get those going right now. But I just wanted to touch base with you guys, kind of go over the methodology. I teach and broadcast this each and every day on Day Trading Radio, and feel free to come by Show is live. We're on from 8:30 to 4 o'clock. So as you go through the markets, you'll see the markets on the screen, and we identified the patterns when they had set up, especially on the 5-minute, which is the intraday stuff. Kind of like with the Amazon on Friday, had a great scalp on Amazon. Well, actually, I had just added to it under 89, and now it's all set up. 5-minute chart is actually setting up for Monday morning, looking for that breakup. You have an upward trend line here on the 5-minute, which we'll see how it plays out. And again, a lot of news that could come out over the weekend can affect the markets too. So technical analysis is great when there's a nice steady market. When there's outside influence or news out there that could really cause the volatility, then we could break down. And that's just the that's the wild pitch. That's the pitch that can hit you. So you always keep an eye out for that. All right, glad I could bring you this video. Again, I'm DayTraderrockstar. You can see me on DayTradingRadio.com.